Welcome, D-traders. Over the past 24 hours, the US dollar index fell to a 4-week low. Wall Street closed Monday's trading session mixed at its lowest level since early June. At the beginning of Tuesday's trading session in the Asia-Pacific region, most stock market indexes posted declines. The Nikkei index almost hit its 3-week low, while New Zealand's index fell to its early low. Only Tuesday, the benchmark 10-year US Treasury yield fell sharply, supporting the global rally in equities. In Asia, investor optimism was boosted by news on the US-China relationship. The two countries' finance ministers announced today that they established working groups to address economic issues, held their first virtual meeting. And the meeting discussed bilateral economic policy issues and was very productive. In addition, the news that China has started buying ETFs through the state-owned Central Huijin investment helped stabilize sentiment in the region's equity markets. Notably, the Chinese regulator has been fixing the yuan daily since August. Thus, the country's authorities are trying to curb the fall of the currency against the background of problems in the economy and the widening gap between the yields of China and the United States. In Asian trade, the yuan strengthened against the US dollar as the US currency depreciated. The US dollar is showing signs of exhaustion at the start of Tuesday's trading session. After hitting multi-month highs earlier this month, the greenback hit a 4-week low of 105.52 against its G6 counterparts over the past 24 hours. With the markets expecting the Fed to leave its monetary policy unchanged, the greenback moved lower within the daily range of 105.35 and 105.65. However, this retreat may only mean a pause. This is confirmed by the fact that the greenback jumped to the upper border of the range early Tuesday. Notably, the FOMC decisions on interest rates will depend on incoming data and the changing outlook and the balance of risks. Therefore, the US currency could get a boost from a batch of economic data that will be released later this week. In addition, the greenback lost ground today due to falling US Treasury yields. However, both of these assets rise amid negative political or economic news. As a result, the US dollar may start another rally in the coming months. As we can see on the weekly chart, the US currency has already made several such rallies since the beginning of October. On Tuesday, the US dollar index is once again trading near 105.50. The greenback's decline, along with the Treasury's yield, had a positive impact on the Japanese yen, and today the yen strengthened within the daily range of 149.30 and 149.80. After a brief spike at the beginning of the Asian session, the Japanese currency dropped and tested the support level of 149.35. So far, the weak greenback limits the pair's upside potential, but the possibility of a currency intervention has not disappeared. The yen held below the psychological level of 150 early Tuesday. However, the multi-week growth momentum is unlikely to have weakened enough for the yen to reverse the rally and strengthen near the October lows of 148.25. Yesterday, Japanese finance officials made no statements. As a rule, they usually provide support to the national currency. However, investors remember their statements about market monitoring and the dovish stance. However, the Bank of Japan's statement was released today, and this time the regulator announced unscheduled purchases of the $2 billion in bonds. This operation should take place tomorrow. If it succeeds, the supply of the US dollar in the forex market will increase and its rally will likely start to decline. The statement made by the Japanese authorities may be related to the economic data released today. As the reports showed, the Japanese economy is decelerating for the third month in a row due to the decline in manufacturing activity. As a result, Japan's composite fell to 49.9 points for the first time since December last year. The preliminary index of business activity in the Australian economy also dropped. However, the country's currency reacts more strongly to external data, and today the Aussie managed to strengthen against the background of declining treasury yields. The US dollar started a correction. As a liquid proxy for the Chinese yuan, the Australian dollar is supported by the Chinese measures to reinforce the yuan. Geopolitical news was put on a slight pause. Oil prices interrupted the sharp two-day decline and returned to growth. The Aussie has been maintaining an uptrend for the second session in a row. In early Tuesday trading, its price rose to 0.6370 and then began to consolidate. In general, the Aussie dollar pair was rising within the daily range of 0.6331 and 0.6380 during the Asian session. And today, the New Zealand dollar soared, testing the intraday resistance level of 0.5874. However, the Kiwi's movement is limited and depends entirely on the greenback. Therefore, the Kiwi dollar pair closed the Asian session, consolidating near 0.5860, approaching the support level of 0.5841 on the daily time frame. However, the Kiwi remains trapped in a long-term bearish momentum. In addition, its price has moved quite close to the early lows. And that's all for now, but keep in mind that the market is changing constantly. Subscribe to InstaForex TV channel, leave your comments and questions below, and we will be happy to get your feedback. See you online soon.